This wave of second wave, it's not been this thing. We have all been fully.
Yeah, I think everyone's learned a different way of working and have started accepting it now, slowly, steadily.
Right, right. And moreover, we ran the full vaccination campaign for all our employees. So all our employees have been doubly vaccinated. So Sansera made sure that almost 7,000 people who work in different factories and different manufacturing locations, all categories, have been vaccinated fully. So that's the first step that we took.
Good to hear. So should we start?
Yes, we are good to go. So would this be what, live or recorded or how?
We are recording it. We are recording it first.
Okay. Okay.
Yeah. Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. B.R. Preetham, Group Chief Executive Officer at Sansera Engineering, and Mr. Vikas Goel, who is the CFO at Sansera Engineering, joining us. Welcome to the show, gentlemen, and a pleasure to speak to you. And congratulations, with regards to where the IPO proceedings go. Firstly, my question coming to you is with regards to where, the IPO goes, the thought behind coming out with an IPO, and if you could just give us more details.
Thank you very much and very good afternoon. Thank you for having us on your show. This is primarily a full OFS. Company was started in 1981, and in 2013, TRG invested in our company, and now they are doing a partial exit, almost less than 50% of their holding, and a very small divestment from the promoters as well. So post the issue, promoters will hold the majority of share, which is going to be about 36%. As far as the primary is concerned, Sansera, as you're aware, we have been in our entire history, except for once, we haven't taken any primary money into it, because we have run the company in a way that all our capex have been funded historically also through our internal accruals as well as the debt. So going forward, we believe the same route which has worked for us all these years will work. So that's been a primary structure of life.
Right. Overall, with all of this, in terms of valuations are concerned, we seem to be at a discount to peers, which is always good with regards to when an IPO comes. So any reason for the same?
Valuation is, it's primarily discussed and decided by the advice of our bankers. So all of us were also of the opinion that, all the shareholders who are going to be part of our Sansera family would be left with something on the table post their investment. So in that thought process, if you look at it, even for our employees, management has offered a 5% discount so that, all of them also would get benefited out of this. So that was the primary idea, though, as you said, that we are, in our opinion, we are very reasonably priced, and, the post our IPO event, the investors who are going to be coming in would be also, there will be something left on the table for them as well.
Right. And overall, if you go to see with regards to where COVID goes, how has been the impact of COVID, and what are been our key learnings in terms of business?
I would probably start answering, and then Vikas can, take it over from there. So initially, in the first phase of COVID, as it was for everybody else, we were also caught, caught by surprise. By we were not prepared. In fact, almost 2.5 months of our production at our various locations got impacted. So was for our customers, though timing was different between exports and domestic, but most of our plants had to be closed because of the restrictions that we had, except for our defense and aerospace unit, which was working only for essential services. But other than that, it was there. And post that also, there were a lot of precautions that was taken. We had a in-house COVID team which would monitor thermally all the temperatures. Pulse oximeters were used in all the plants to ensure that while we started it, we don't get into any trouble. So post that, And then in the operations phase, we made sure that all our costs were cut. The manpower, the floating manpower were, only employed to the extent of what is required. Inventories were cut. We became more lean. With all this learning, the second innings was much more easier. I mean, we were prepared for literally, we were prepared for the second wave that was expected. And, except for a couple of days while government has to give a permission, our operations this time was not affected. And, company also took a decision that as soon as we could, we organized medical camps in all our plants and ensured that most of our employees, I would say more than 98% of our employees have been vaccinated with both the vaccines. While all our austerity measures have continued, which has given us quite an advantage on our operations as well.
Okay. And in terms of recovery, how has the recovery curve been? Are we back to pre-COVID levels?
I would say we are slightly ahead of that.
Wow.
So,
okay.
If you look at the FY21 numbers, we had a total revenue growth of approximately 6%. And if we break it up, our domestic business was almost flat, about -2%, whereas the automotive industry shrank faster in that period. And we had significant growth in our exports business, which is about 20%, which actually has helped us. And now we are actually at a different base, at an elevated base as against pre-COVID level. So we are now looking forward to growth from this point onwards.
Right. And overall, with regards to where financial year 21 goes, we've taken almost 65% of our revenues from India. The remaining portion came from exports to Europe, US, and other countries. Is the revenue mix expected to remain the same from here on as well?
Largely similar. We don't expect too much of a change, but of course, exports, we are getting more traction. We have more demand from the customers, and we expect exports business, or rather the global business, to grow slightly sharper than the domestic revenue, is what our estimate at this point.
So when we say exports, this also includes revenues coming out of our Swedish facility, because 65% of the revenue has come from sales within India and 35% outside India, which also includes our sales from our Swedish facility. So as Vikas said that, yes, while both the growth curves are pretty sharp and aggressive, because of exports being a slightly higher value addition for us, probably we will have a couple of points faster growth in export in the coming years compared to the domestic.
Right. So in terms of capacity utilization, how much is it with regards to the domestic facilities on a blended basis? And what is the capacity utilization with regards to the Swedish facility?
Okay. So in Sansera, we do not have any dedicated lines for domestic as exports. As let me just, before getting into the utilization portion, I just want to tell you that Sansera's one of the USPs is making our own machines and our own automation. So more than 900 machines have been made in-house, designed and manufactured in-house by our in-house manufacturing team, which is spread across all our manufacturing facilities. These machine building activities would give us three distinct advantages. One is, in terms of the cost of the machines, it would be comparatively competitive compared to what we can buy either from India or from the export market. It is also lean in terms of the power utilization and the space. And the third important factor is we can build it faster than what we can buy. With all these advantages, one very significant advantage is these machines are, we don't make any standard machines that are available. These are very, very high-end CNC machines, which are modular and fully fungible. So why I said fully fungible is, these are fungible across, this can be adopted across the product sectors, across the components, and across the application. So for us, there is actually no dedicated facility that we define as domestic or exports, But if you look at overall utilization of Sansera as what we have given in DRHP, this was primarily whatever we have declared is about a 9.5 to 10 months of production utilization that we have had. So if you have to really look at per quarter basis, this would be in the range of 75 to 80% utilization. And company also is comfortable around 80-85% because, automotive sector in which we operate, this is in the peak season, you would get about 5 to 7% more extra demand from our customers. And Sansera being either a single source or the majority source for most of the customers, we have that responsibility of delivering those, peak demands as well. And another aspect is, in this volatile times, you also get opportunities from customers because some of the vendors that, who are not very financially sound would find it difficult to continue and grow at that point of time. Either the entire business or a share of business is transferred to the financially prudent vendors. So we take that opportunity and grow much faster. So keeping this in mind, we generally operate around 80-85%. And when we reach those levels for a particular product, we keep expanding.
Right. So overall, from here on, if you have to look at expansion as well, do we see any benefits of the PLI schemes that the government is offering?
Well, we do expect some benefits to accrue, but we are yet to see the details of the scheme. I heard something has been approved by the cabinet today, but the details are not yet available in the public domain. So we do expect, because we are expanding fast, we are also expanding our exports. And we do a variety of components in the auto component space. So we do expect some benefits will accrue. We will probably be able to take a view once we have more details about it.
Adding to what Vikas said, we are also putting up a greenfield facility for EV and hybrid components. So this is a new facility that is being put up in one of our Bangalore plants. So we do expect that company will get benefited out of the PLI scheme. So of course, the details are yet to be awaited because only today the cabinet has approved the PLI, so we need to go through it. But we do expect that we will be benefited.
Right. And overall, with regards to where the automotive and the non-automotive segments go, where are you seeing higher traction from here on?
So, there are three areas of growth in both the sectors for us. Just to give you, one would be that, if more outsourcing from the customer, customers, some of our components most of our components which we are into, which is a high precision category of components, traditionally being done in-house by the OEMs. So, but newer and newer models are getting more and more outsourced. And there is also this, vendor consolidation and also China plus policy, which is happening. And the third important factor is the financial prudence, as I said, that the business growth is coming. Now, from the last few years, company, as we have also, explained in our RHP, that we have been focusing on technology agnostic and non-auto sector more aggressively from the last few years. Because we are really, while we are very, confident of our journey into electric vehicle space, as we have already acquired orders in both two-wheelers as well as passenger vehicle in that space from both the new age manufacturers and the traditional OEMs. But, to be very, very clear, none of us can really be clear as to what technology is going to be adopted, whether it is EV, hybrid, fuel cells, or something else. So, as a strategy, Sansera has decided that we will be focusing more on technology agnostic and also on futuristic material like, aluminum forging as well, which will be used in lightweighting of the vehicles. So, with that in focus, our focus has increased on technology agnostic and non-auto. I would say in the mid to long term, this sector, which is non-auto and technology agnostic, will grow much faster than the auto sector. This is what also indicate in our 160 purchase orders or LOIs that we have received as of the RHP date, what we have declared in the RHP.
Right. And overall, within the non-automotive, sector as well, what is the kind of revenue mix we are expecting?
So there are primarily 3 or 4 big segments in non-automotive space. We talk about aerospace and defense. We talk about agriculture, and we talk about stationary engines and infrastructure sector. Fourth segment, which is now emerging as we see, is certain other products like bicycles and certain similar applications, off-road vehicles, yeah, as well as uh, yeah, yeah.
So all these sectors put together contributed about close to 12% in the last financial year. Going forward, I can't give you exact, forward-looking numbers, but all that I can say is this sector, this non-automotive sectors, is growing much faster than automotive sector for us in terms of the percentage growth.
Okay. And overall, in terms of the automotive segment as well, where are you seeing traction between two-wheelers, passenger vehicles, and CV? Because COVID had a major impact. Two-wheelers was something which was doing really well. CVs had seen some bit of a drop that had come in. So what's the sense you pick up?
So while we began this year, as even the industry had predicted that we were looking at about 15% growth on a year-on-year basis from the lowered base from the last year in the passenger vehicle sector and about 12% growth in the two-wheeler sector. But having said that, because of the second wave of COVID, the entire market and also the chip shortage that has been existing in the passenger vehicle globally, we are looking at closer to less than a double digit or a closer to double digit growth in the two-wheeler sector. But we feel that on the passenger vehicle sector, since there is a lot of demand and there would be a pent-up demand, we're still hoping that the industry should be able to close anywhere close to the projected 15% growth. But Sansera will grow much faster, as we have demonstrated in the earlier years as well. This is due to the fact that a lot of new business is getting added to us, which has already started in the last year or starting in this year. This would be on top of the normal industry growth that we would have.
Okay. And overall, as you mentioned about the EV space as well, there is a lot of fear of rising competition from EV players and requirement for capex for EV expansion. Are we well equipped to meet the EV demand as well?
Yes, our journey has started into EV space. We have been able to acquire orders from both the new age startup companies as well as the traditional OEMs who are getting into the EV space. As I speak, our journey has begun well because the transition into EV may take some time. Especially it has started with scooters and also with three-wheelers. Now, the other sectors like motorcycle and passenger vehicle probably would take some more time, and the technology is also. See, in the two-wheeler sector, the technology is just evolving. Unlike in the passenger vehicle, where you have established players globally who would make both the electric cars as well as the hybrid vehicles. In two-wheeler, the powerful electric technology is just evolving. You can see that all the traditional OEMs are also taking time to come into this segment as well as the new age startups. So as the technology is evolving, Sansera is also getting evolved into that. As I explained to you that our facilities are mostly fungible. The kind of components that we manufacture can be either, for ICE or for EV, we could adopt it with little or no modification. So if the industry is going to grow much faster than one would expect, which means that the electric vehicle will become more popular than what we expect, we are very well prepared to, convert or use our existing facilities to manufacture these components. But on the contrary, even if the industry is not going to grow as per the expectation, whatever facilities that we are putting exclusively for electric components can also be used for our traditional ICE components. So we do not see any risk in our capacity that we are creating, either over or under. That risk is not there. We expect that we would be able to adapt to this growth at whatever pace at which the industry will grow.
Right. And I know we are, we are, because we're in the IPO timeline, we're not able to give forward-looking statements. However, any milestones of the company that we could consider and talk about?
Uh, I mean, as you have rightly said, that we can't give you much in terms of what we are going to do, how we are going to do on the number front. But all that I can say is we are looking at certain sectors very aggressively. One, as I clearly said, that we are putting up a new facility which is going to be ready for production by third quarter of this financial year for electric EV two-wheeler components as well as passenger vehicle hybrid components. It's an exclusive facility that we are putting up. This should certainly add growth and revenue to our top line. And then we are also putting up a new facility or an additional capacity for aerospace and defense. Now, and defense is a quite a interesting field for us. We started our journey in 2015 with a very small investment, and when we put up a new facility there, over the years, we have been well recognized by all our customers in aerospace. In fact, now we have reached a stage where we are doing components related to engine, related to actuation parts in a commercial aircraft, and there is a lot of interest and business that is coming in our way in the defense sector as well. So, looking at these, we are expanding in this space. We are putting up a big facility very near to our Bangalore facility, and this should also give us a very aggressive growth in this sectors as well.
Absolutely. I think the roadmap looks pretty strong from here on. Thank you, Mr. Preetham. Thank you, Mr. Vikas, so much for joining us on the show. A pleasure to speak to you and get insights. Congratulations once again, and good luck for the IPO, and stay safe.
Thank you. Pleasure is ours.
Thank you very much for having us on your show. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.